And now for something completely different.
Forget everything you've been told by others before. Get ready for the real deal. The full story. Real talk about money, markets, life. Now, it's The Real Investment Show, presented by RIA Advisors.
Well, it's real, and there are investments, and it's a show, but it's Financial Fitness Friday. Mr. Announcer, who can't give us our own promo opening. I'm not bitter or anything. Rich Rosso, Danny Ratliff, CFP. Friday thought, thinking about how scared the Founding Fathers would be if they saw a Furby.
They saw what?
A Furby.
A Furby.
Yeah, remember that toy?
No.
He's going to ruin the joke.
I am.
How about a Teddy Ruxpin?
No.
I would rather have a Teddy Ruxpin at the White House. We're glad you're with us today. So, obviously, Apple set the tone. It's up 6 points. Danny, I will tell you. I was sort of flabbergasted by, it's a big word, the actual buyback. The biggest U.S. buyback in history, $110 billion. Nice margins, I have to say. You know, their service business at Apple is kicking butt, even though iPhone sales are down. So, but over $100 billion in share repurchases. That was something, huh?
No, that really was. It was interesting to see his sales declined a bit. And, you know, I think the concerns have been around China, restrictions they've had, you know, that were announced over the last several quarters. And trying to gain market share in India, you know, has been a big push that they've had. But the service end of it has been the big part of it. And then obviously, yes, I think the market loves the share buybacks. I mean,
massive. Yeah,
tremendous. That's going to be something that we've, you know, been a busy week. Lots of earnings, lots of economic data, obviously the Fed meeting.
Yeah, April's job report, that's going to be a big one that comes out today.
Yeah. Yep.
We'll see with that. We're expecting non-farm payrolls up 250,000. was up 303,000. Obviously, what we're really seeing too is mostly government jobs. I mean, a job's a job, but we'll see what we see. So big number this morning, but Apple definitely wins the news headlines. I will tell you the one thing I think that's smart about Apple is they're realizing that the iPhone is just becoming a toaster. I mean, it's a big brick that you use, but it's everything else that you do with it, right? It's all the productivity tools. It's the music. It's that annualized, that annuity of revenue that they're trying to build up. So that, in other words, what they try to do, and I'm thinking is, listen, you put the iPhone down within all the arsenal of all the other stuff we've got. It's not about product anymore. We know the product is just a function of doing business.
It's the gateway drug.
It's the gateway drug. That's pretty good. Wow, he's on it today. But that's what it is, right? So, and then all at the same time, manage your costs well, and then come back with this powerhouse $110 billion repurchase. So we'll see how that changes the tone of the market. But I think non-farm payrolls will definitely may even be rival that news this morning.
Yeah, I think it's been an interesting week. We did expect volatility, and yet here we are, right? We're seeing it. NASDAQ futures are currently up at overnight? Apple's up 7%.
Yeah. Yeah,
Not bad.
still up close to 7% right now.
You know what's interesting? I think everybody's been on pins and needles, wondering what the Fed will do. Obviously, the likelihood of a rate cut was decreased significantly, but I think we were waiting to see. Are they going to talk about actually raising interest rates again? What is the verbiage here? Meeting minutes are going to be super important, but the overall sentiment was pretty much the same. Hey, we're staying, we're waiting and seeing, and still rate cuts potentially in the future, just not as many. It's kind of what I took from that. I don't know if you took anything else from it.
I think because we've seen we have seen labor productivity grow at about 1.6%. Now, actually if that's pandemic, after the pandemic, about 1.2%, but that's the highest it's been in a while. So you are seeing the effects of efficiencies, small businesses, AI, right, is really helping, I think, keep costs sort of subdued. But labor costs are going to be important. We've seen a tick up over the last 3 months. I'm still in this camp that the Fed probably should raise rates, but as I see the data starting to come down, I understand that maybe keeping it the way it is probably the right thing to do. We always know the Fed makes a bad move or the wrong move. But I will say, and I've been saying this to clients, I am actually very surprised. And maybe if AI wasn't part of the overall narrative, I'm very surprised the market's only down around 4 to 5% from the high. Without that other drug, that other gateway drug that the market loves, right? It needs to get its fix. And when it wasn't going to get its fix, and it may not even get a fix until November, because I think futures are pricing in maybe a rate cut in November, maybe a 50% chance of that. So that's I still think that the market's handling that news very well. And maybe it's all the other narratives sort of taking up some of the room in the headspace of the market that's not taking it down more. Because I would think if you're not giving the drug, you would have been at least would have had a pullback of 10%. But you're not even seeing that right now.
Yeah, I think expectations have been, Lance has been talking about a 5 to 10% correction. Here we are.
Yeah.
Still kind of smack dab in the middle of it, but haven't seen much more deterioration, especially even though when technicals have broken down a bit. And we like to smooth the data out a little bit longer. But it's been an interesting time. And I'll tell you this, the dynamic around this pullback has been much different from, I think, a client perspective or people you visit with, Rich.
Yeah.
In the sense that, a lot of times there's more pandemonium, and I don't know that that's there. And I think a little bit of it is people have been number one, more proactive in the sense of, okay, hey, I understand you've taken a little bit of chips off the table, taken profits along the way, reducing exposure.
We have, to your point. I think it's been stealth because people don't recognize it, but we do work around the edges. We just haven't had major sell signals. Right? And 5 to 10%, frankly, will feel worse. But that is the cost of doing business. That is the cost of investing in the market. You should be getting multiple 5 to 10% pullbacks a year. I'll tell you this, YouTube chat's on fire this morning. I don't know what y'all taking, but send me some. Is it shrooms? What do you put in your coffee?
Shrooms?
We're paying for more government jobs, producing less services. Yeah, Marie. Yeah, that's true. I mean, a job's a job, and it's, it helps the economy. But to your point, and again, we're seeing most of these government jobs in local municipalities. You're seeing a lot of job growth. But again, to your point, this has been a government-driven economy for the most part. Lots of money. I think, Danny, I was telling a client again yesterday that I think we underestimated the amount of stimulus that was actually in the system.
Oh, no doubt. I think that everybody did.
Maybe we just couldn't wrap our heads around it, but it was...
I don't know that it was underestimating the actual amount of stimulus. It's the times and the how long they did this for.
Right? Yeah, one right after the other. And massive and massive.
Correct. One package. Say, okay, all right. Here's what this means. Here's what the economy should do with this. And then on the heels of it, another one. Oh, we're going to extend this. And so that's what I think has made this a bit of a challenge in many ways. And, all sectors have not been created equal in this environment because a lot of the stimulus money.
Yeah. Not only was Janet Yellen one of the worst Fed chairs, but she's also become a full-blown Marxist based on her comments. I've never really heard a Treasury Secretary with the kind of speech she's had. But she's fighting now over the tax cuts. I've got my gloves on, and I'm going to punch all you rich people right in the nads when I get back.
Wonder who needs money. Not her.
Not her. Stay tuned.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
So you're ready to retire, but are you ready to transition to Medicare? Knowing how health insurance works after you leave your job is vital. Our next Lunch and Learn will tackle transitioning to Medicare, Wednesday, May 15th, with Danny Ratliff and Richard Rosso. How do you sign up for Medicare? And how will it work with the insurance you already have? Food for thought and food for your belly. Register now for our Transitioning to Medicare Lunch and Learn with Ratliff and Rosso at realinvestmentadvice.com. Realinvestmentadvice.com.
When it comes to wealth management, most people think of stocks and bonds, but it's like enjoying one layer in a 7-layer cake. At RIA Advisors, we want to make sure you get your cake and eat it too. Social Security, Medicare, creating a tax-friendly retirement paycheck. Perhaps you're saving for college. How about life insurance, guaranteed income solutions, all along with comprehensive planning? At RIA, a holistic approach to your money is our priority. Call us today, 855-RIA-PLAN, or find us online at realinvestmentadvice.com. Realinvestmentadvice.com.
The Real Investment Show.
Small businesses are discovering that attracting and retaining top talent come down to more than just salary. In today's highly competitive job market, compensation is more than just wages. Hi, I'm Tom Allen, RIA Advisors Retirement Plan Consultant. Healthcare and retirement plans can make the difference in hiring and retaining the best employees. We can show you how to build an affordable, effective employment package that delivers true value for your workers and your business. Call me toll-free at 855-RIA-PLAN or online at realinvestmentadvice.com.
And now, another page from the Real Investment Advisors Investing Manifesto. Bulls win in bull markets. Bears win in bear markets. Eagles soar above and take advantage of opportunity. Let us help you soar as you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
You're listening to The Real Investment Show.
Listen, YouTube chat, Grandma Rosso would not let an apple go to waste. Even the worm would be repurposed. It's one thing to say about depression babies. Nothing went to waste. That is absolute for sure. Right? Brent's like, yep. I remember those days. Oh, man. So we're going to hear some... frankly, some ignorant tax ad hominems making the news. So obviously, the Tax Cuts and Jobs Act, Danny, I've talked about, is going to sunset. And frankly, I don't really care who's in charge. I just don't see it happening. So it's always this talk about, well, it's the tax cuts went to the wealthiest of individuals. Well, that sort of makes sense, and that's maybe a fact. I don't know why it's a negative fact. If you look at the Tax Foundation and their analysis of tax returns from 2021, right? If you made anywhere from $94,000 to $170,000 earnings, you paid an average tax rate of 10%. If I was at the top 1%, which my earnings were in excess of $682,000, I paid 26%. So, and again, it's not even taking into account the aggressive tax credits that were part of the act, and also the fact that we took away the SALT deductions, which a lot of wealthier people in Congress are really ticked off about, especially in the coastal cities. So, of course, tax cuts will benefit higher earners more than not. So now she is issuing her set of principles. The negotiations are based on, they will not support increases on families making under $400,000. What I just don't understand is how they come up with these numbers. Why is it under 400? Why is it under 250? What's the magic? I don't understand where these numbers come from, Danny, and I can never figure out. I never can find out how they get to them.
I'm not sure they know.
I don't think so.
I mean, quite frankly, we know everything that's said. I mean, look, a lot of this is very disingenuous. There's a lot of information here. It changes.
It's such political red meat. Such political bloody red meat.
Yeah, and we're going to hear a whole lot of that this time of year, right? We're in that political storm where we're going to be, inundated with a lot of different information. And some of it true, some of it just talk, some of it you got to take with a grain of salt, and likely nothing will come of it. However, I do believe that we're going to see higher taxes, just like you mentioned. This will likely sunset at the least, but they're going to do all they can at this moment. I think, it's not that Janet Yellen personally needs money, but the Treasury needs money. We've got a spending problem. They're framing this as, these government, these tax cuts, all the rich people.
What did Mark Cuban pay in taxes? He said $238 million.
Something crazy.
Okay, I'm not a big fan of Mark Cuban, but that's a heck of a lot of money, right? If you have a cow or a golden goose that just keeps producing, you don't worry about your costs, right? So there's got to be a balance on both sides, right? You've got to look at costs, and you also have to look at, well, where can we raise taxes? You want to put a wealth tax for people making that have $100 million plus in wealth. I mean, Mark Cuban says he's okay with it, so do it.
Yeah,
but it's not going to move the needle. It's a great political win, but what does it do? Right? I mean, we are not efficient. Lance has done such great homework, and Mike too, great analysis on all the stimulus packages. As for every dollar that we put in, what are we getting in GDP growth? 30 cents, maybe 30 cents. I think I remember that research correctly. So this is not productive asset. This is very unproductive asset. I will admit, I do like the fact that money goes into semiconductors and building efficiencies, and infrastructure is something we obviously need, although obviously, not for electric cars, but just the fact that you drive a road and you feel like, you're on the set of 1883. Because the roads are from then. Yeah. So again, this is going to be a big battle that ultimately we're all going to pay. I don't care how much you make. Well, higher prices, whatever it is, we're all going to pay for this kind of thing. And I really would like to know these tax reductions. If I'm earning less than $400,000, and my average tax rate might be closer to, at that level, 19%. But what about if I'm in California or New York, and my tax rate could be closer to, in all fairness, with local tax, 50%. Like, how much more are you going to tax me? If I'm making $400,000 and I have kids, and 50% of my money is going into gosh knows where because my infrastructure is falling apart. So it's the use of these dollars. It's not the highest and best use of the money. I don't think any side can argue that they make efficient decisions. Republicans
Well, they're
or
telling you
Democrats.
they do. That's why they
I
need
know.
the money. I mean, clearly. This is a problem.
Yeah.
But this is where I think that they're overlooking the bigger issue here. So we talked about this a little bit last week. You were gone. You would have been proud of me. I was pretty riled up for a moment. But
riled up again?
you know, the problem is, okay, you tax these evil people who make a ton of money.
That provide all these jobs.
That's right.
Think about, I understand, I don't understand Jeff Bezos' girlfriend. I mean, she's sort of, I don't know. Listen,
What?
I like,
What?
no, I'm
Squirrel?
just saying,
Huh?
no, I'm just thinking about Amazon, right? Yeah, could he pay his people more? Listen, we're big believers in paying your people, right?
Yeah.
There are some CEOs that are really big believers in having you pay your people well, right? And so I think small businesses feel that more than anything else. But these tax cuts or whatever they're doing, or these tax raises that they want, are not going to budge or do anything except, again, demonize companies that create jobs. I mean, as much as you might not like Amazon or Walmart, I mean, I read a great article in the Wall Street Journal the other day, the day in the life of maybe some of you all read it, of a Walmart manager who makes $250,000 a year. Now, she breaks her butt. She lives in the town. She works 12 hours a day. And it went through all the things she does hour by hour, which is not, listen, dealing retail is not an easy job. But she has really good communication skills with her teams, and she knows what sells. She knows logistics of her store. And, she makes a good living doing that. But Walmart has always been demonized for not paying people enough. And since when is a Walmart job or working as an associate like a permanent job? When did these jobs become careers? There's some transition that went to be working at McDonald's became a career. And I don't know what happened. I'm not
Well, I think for
skilled
people
enough to
like that who
understand it.
you do work your way up to a store manager, I mean, there are
For
you
people
need
that might want to
right?
do that.
Yeah.
Yeah. Or I'm working part-time, right, to fill in. We have a lot of retirees that wouldn't mind. They work at Walmart or Buc-ee's, or it's not because maybe they like a little bit of the spending cash, but they just like to be social. They're not looking to move up the food chain in these places. So you can go ahead and demonize these people. It's good. We're going to get tax. We're going to have political fatigue, but we're also going to have tax argument fatigue.
Oh, there's no doubt.
This is going to be, again.
Well, the problem is that you go after these people, so what happens? Here's where I think the bigger problem is.
You're demonizing people who are creating wealth and creating jobs. That's sort of what you're trying to do.
You are doing that, but it's also like you give them an inch, they take a mile, right?
Yeah.
And so that's where it starts. And, unearned, unrealized capital gains, I hate that. I don't like that one bit.
Well, imagine taxing, look at us. We have some cash, but you go and tax us on unrealized gain. You tax any small business that is, say, equipment rich, cash poor. And you're saying your biz now is worth this. Where are you going to come up with the money?
Well, where are you going to come up with that valuation, right?
Yeah.
I mean, who's going to do that? Are you going to require the business to go get an appraisal every year? I mean, how's that going to work,
I don't
right?
know. And
Just
then-
like you get one on your home, is there going to be a new
And what if
a
my
new
net- what if
entity?
my-
That's exactly what's going to happen. A new government entity.
Oh, a new
to
department.
determine.
A new department.
Yep, a new department.
Valuation department.
Oh, good Lord.
And then say my business is worth $100 million 1 year, and I pay the taxes, and now it's worth 90. You give me money back?
No. Yeah, we're going to get a break?
No.
No, but that's why I think some of this is so far-fetched in some ways. But if they figure a way out to get some of this done, that's what will happen. They'll pass a bill, then figure it out, right? Because they can't even read it before they pass it.
No, they don't, and they tell you that. You got to pass it, then read it.
The funny thing is they would take offense with this conversation, I think. But they
Well,
know that's exactly what happens. I mean,
We have to look at it from the perspective of how do we help clients make smart tax decisions.
Correct.
No one is trying to avoid taxes Although sometimes I do get a little bile in my mouth when I have to write a check.
Man, there's no doubt about
And I
that.
never felt that way. I have to tell you candidly, always felt that paying taxes was what I was supposed to do, but not the way we spend money now.
Well, it's your
and how we
civic
spend
duty,
it.
you kind
I
of felt like.
just- yeah.
And, you're proud of America. You want to put it back into her.
Yeah.
And now with this environment, you write that check, it's difficult.
It is. It's difficult. Listen, if it helps veterans, poor people, I'm all for helping people that need a leg up. I believe in that. And I grew up in a family. My mother, we were on welfare. It was the most embarrassing dang thing in the world, going to school with the book of foods, going to a supermarket for food stamps. With food stamps, man, I would do anything not to use those damn things. But sometimes people need help.
Yeah.
And that's fine. So this is going to be something what we have to be aware of as advisors is how do we help you make smart decisions that come down the pike from either party and be as tax efficient as possible. And one of those is Roth conversions we've been talking about forever, which are now, we're in the Rothification of America through legislation. We get back, we got some other stuff we're going to talk about. I'm still into the YouTube channel. These guys are having their own show.
All right.
Be right back.
The Real Investment Advice blog. It's required reading for the informed investor. Catch it today at realinvestmentadvice.com.
So you're ready to retire, but are you ready to transition to Medicare? Knowing how health insurance works after you leave your job is vital. Our next Lunch and Learn will tackle transitioning to Medicare, Wednesday, May 15th, with Danny Ratliff and Richard Rosso. How do you sign up for Medicare? And how will it work with the insurance you already have? Food for thought and food for your belly. Register now for our Transitioning to Medicare Lunch and Learn with Ratliff and Rosso at realinvestmentadvice.com. Realinvestmentadvice.com.
Hi, Lance Roberts here. If you're like most people, your 401k plan represents the bulk of your retirement assets. And unfortunately for many, managing your 401k plan can be difficult. There's so many choices, so many things to consider. With just a quick email, a couple of questions, you can put RIA advisors to work for you managing your 401k plan. Just simply click Ask a Question at realinvestmentadvice.com or give us a call at 855-RIA-PLAN. That's realinvestmentadvice.com.
The Real Investment Show.
And now, another page from the Real Investment Advisors Investing Manifesto. Manage risk and volatility rather than trying to manage gains. You don't have to be right all the time. Long-term investing success is a 70% gain. Let us help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
Can't catch the whole show now? Listen to our podcast later at realinvestmentadvice.com.
Part of the problem of the average American is that we've just chosen to live well beyond our means.
Basically, you can buy anything you want out there on a payment. You need new underwear? Go get it on a payment plan.
Underwear can be expensive. If you buy some Jimmy John's, they're not cheap.
Jimmy John's.
And
Sandwich
the point
underwear?
is,
What is this?
But Tommy John's, thank you.
The Real Investment Show podcast
That's why I just don't wear underwear. It's too expensive anymore.
at realinvestmentadvice.com.
Going commando is going to become a new thing for the poor people.
It's going to be a...
When it comes to wealth management, most people think of stocks and bonds, but it's like enjoying one layer in a 7-layer cake. At RIA Advisors, we want to make sure you get your cake and eat it too. Social Security, Medicare, creating a tax-friendly retirement paycheck. Perhaps you're saving for college. How about life insurance, guaranteed income solutions, all along with comprehensive planning. At RIA, a holistic approach to your money is our priority. Call us today, 855-RIA-PLAN, or find us online at realinvestmentadvice.com. Realinvestmentadvice.com.
Health and financial security touches everyone within your organization. Offering benefits for all doesn't need to be complicated. Hi, I'm Tom Allen, Senior Benefits Consultant at RIA Advisors. RIA Benefits provides independent expertise to find solutions that speak to the mission of your business, the culture you want to establish, and the budget you are able to work within. Book a free consultation with me at realinvestmentadvice.com/retirement, and we'll find a solution that takes care of your most important asset, your people. realinvestmentadvice.com/retirement, realinvestmentadvice.com.
The Real Investment Show YouTube channel has all our videos ready for your easy access, like Technically Speaking Tuesday, Financial Fitness Friday, plus each day's radio shows. Subscribe and bookmark our YouTube channel at realinvestmentadvice.com.
You're listening to The Real Investment Show.
You guys are clever this morning. New profession. This is from Tara Watt here. New profession. U.S. Appraisal Group. USAG to be created by Elizabeth Warren. What? Bring me a beer, honey. I need a beer. It's been a long day at work. That's my Elizabeth Warren impression.
Man, you may want to leave that one at home.
Oh, yeah. Oh, so that commercial was cringeworthy. Elizabeth Warren with a beer. That was pretty funny. So we have it on transitioning to Medicare Lunch and Learn here at the office. Small group, 15. But if you really want to learn about Medicare, an intimate setting, how health insurance works for you, when you should sign up, how does it work with your current insurance? I don't even know how Medicare works. I have no idea what Cobra is. I got bit once by a snake in the New York sewer, but I have no idea how to keep track of Medicare deadlines. So that's Wednesday, May 15th at noon. And we will have lunch for you in our classroom. It's very nice informal setting for you. And believe me, you're going to need lunch, and probably after that, you're going to want to go for a cocktail because this is Medicare. Man, it's not easy. Actually, they make Medicare more difficult than it is. I mean, I understand it's an alphabet soup, but once you get it, it's not that difficult to communicate. There's just a lot of ways to make mistakes. And speaking of mistakes, we're going to talk about this a little bit. David Blanchett is sort of he studies a lot on the planning side, retirement income strategies and so forth. David Blanchett and Jason Fichtner wrote a paper on biased advice for Social Security. That advisors purposely are not helping clients make the right claiming decision. Now, I always felt that this might be an issue, and we've seen this in our right lane classes. But I thought of it as the form of more of going along with the narrative, right? I got to get what's coming to me, blah, 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 all this stuff that goes along with Social Security. But it's really more of if I wait to claim, say at 70, or later than full retirement age, that means I have to start drawing down from my variable assets, maybe my IRAs, my brokerage accounts, as a bridge to Social Security. Thus, that means as an advisor, that advisor has less assets to manage, less fees to charge. So thus, maybe it affects their decision-making capabilities. And obviously, the paper that was written shows that that was absolutely the case.
You know, this has never crossed my mind.
I know, me neither, actually.
I always thought I read the article. I was like, oh, okay, I guess so.
I got it once I read it, but it never really crossed my mind that you would be that. I mean,
think you forget
I don't know if I
how-
want to use the word greedy, but you would be
that's
that.
exactly the word.
That you would be that with, like, in other words, to help somebody make or not make a good claiming decision. Also, I also think, in all fairness, and this paper doesn't really show this, you're an advisor. You have been fed the lie that stocks are the solution to everything, right? So in other words, in your mind, you might say, well, stocks are going to do better than Social Security, right? I mean, Social Security doesn't. In other words, you know what I mean? Maybe it's more of, you're going to do much better in stocks than this. Because maybe some advisors don't understand how guaranteed income works, right? They're not into this they're not
Or how
looking
markets work. Compounding, math of loss.
Markets
Markets
always go up, Dan.
Yeah. I mean, they sure. They do in general, correct. They go up more
Listen,
than they go
Dan,
down. That's
Dan,
absolutely
markets always go
correct.
up. Yeah.
But I guess the problem is, what about these people that need this additional income? What about the spouse if somebody passes away? What about all the things that, I mean, I don't know. This is foreign to me, just the thought of this in general.
Me too. It's not in my grain, but that's why we're fiduciaries. Like this rubs against us the very wrong way, like a wet cat.
But also,
it's like
a
wet cat.
I know a lot of
against your
financial
legs.
advisors, and
I got some hairy legs. What?
I in lots of different places, and I don't think any of them, just knowing these people, are doing that. Now, maybe as a whole, there's much more that's going on than we think, and we're just blessed and lucky to know good people.
Yeah.
But, I mean, I don't know guys that are out there and gals that are recommending taking it early because they're thinking about their bottom line.
Well, frankly, I know a lot of advisors don't want to talk about Social Security at all.
Well, there are a lot of them that don't, right?
Like
There's a lot of them that don't talk about that or Medicare.
We're not going out. We're not touching that dust bunny under the bed. Whew. Let that grow. Go see somebody else. We don't do that.
Well, there's a lot of firms that they don't even allow their CFPs to go
talk about. No, I know.
I mean, it's financial planning light, right? They say, hey, we could talk about it, but don't get into the numbers.
Yeah.
Don't get in the weeds.
Just maybe you can mention it.
And Medicare.
Oh, forget it.
Yeah.
So the paper suggests that advisors may not be providing advice that's truly in the best interest of clients. So it suggests that the financial advisor compensation can have a direct impact on the quality of services. So, and again, in 2015, we always talk about the stat. More than half the households headed by someone 65 and older were relying on Social Security benefits for a majority of total income. 23% of age beneficiary couples and 43% of non-married beneficiaries were depending on Social Security for at least 90% of their income. So making the claim decision properly is very important overall. And so and again, they have a lot of backup documentation to prove that show that the resulting positive benefits, say, of delaying claiming for households may be negative for financial advisors. Reduces an AU assets under management. I'm thankful, Danny, as I read through this, just like you are, to make this kind of suggestion that it's totally against the client is not even in my foray. Like, I can't even fathom thinking this way.
Well, and if we had an advisor who was thinking this way, you and I would both have a significant problem. They wouldn't be here.
They wouldn't be here.
Well, but you do the math and to think about this. I've never gone down this rabbit hole, but so average Social Security payment in 2024 is about $21,210. Let's just call it 1% for easy math. And I know there's a lot of firms that charge way more than that. Or maybe it's more of a broker deal, Rich, where it's guys that are getting commissions.
Yeah, I mean, again, I also think it might be naive again about. I mean, you shouldn't be giving Social Security advice. Like when we were doing right lanes, how many people how many advisors were telling people to take it early?
Yeah.
While they were still working a full-time job. Right? So because it's not going to be there for you. But I'm age 62. I'm not retiring anytime soon. Why am I taking Social Security and reducing my benefit by 25%? Not only that, I'm getting a reduction. We've gone through this process of people getting surprised by this process of taking Social Security early and still working a full-time job. So, but it's an interesting study. It does show you that you have to have, I understand if you go to a broker and they're one-dimensional, they might give you some advice on debt management, emergency cash savings, but they're not going to dig into some of the decisions you need to make. And they're not paid to do that, in all fairness. I mean, they may guide you to the Social Security Administration sites. They might have a professional that they recommend, but they're not really going to dig into this. I just noticed that, and again, we wanted to do that on purpose. We wanted to make sure that we were very proficient in benefits and looking at things holistically, especially for pre-retirees and retirees, which was important.
Yeah, so if somebody's giving you that guidance, call them on it. Why?
Yeah,
What's
I've read this and I've read that, or go get a second opinion.
Yeah, I think that's a really valid point.
You've got to get a second opinion on this.
A second opinion if somebody's telling you to take it early, unless you absolutely have to. Look, I get it. There's a lot of people out there that, life happens. You retire earlier than you expect. Somebody gets sick. You need the income. Okay, take it. But for a lot of people we visit with, I can't make a really good argument.
Yeah.
And sometimes it may be, hey, we're going to wait till at least full retirement age, and then we're going to play it year by year. We'll see how things are going, see how the markets are going, how are expenses going. Are you spending more than you thought? Maybe this will help a little bit. But we want to at least delay till then, if possible. And then if you get that 8% bump each and every year, fantastic. But
we run the numbers, and we understand the person's situation and longevity. There's so much that goes into a guaranteed income decision overall, right? It's not just Social Security. It's whether or not, it's just like annuities are sold. And we're going to talk about this because there has been more interest in annuities in 401ks than ever, right? Over 3/4 of defined contribution plans participants say they would likely invest in an in-plan annuity if offered. Because what a lot of people are starting to realize is having a check for life, regardless of how much income you're going to bring in, is very important. Social Security is one of those elements, but you might have to create your own pension. So advisors are going to have to understand that, like, we don't sell, we have an insurance division, but we don't sell insurance. We recommend if you need it, you come to us or not. But we do planning to see if you even need it. Like, I have a client that absolutely wants long-term care insurance, and he absolutely doesn't need it.
yeah,
no,
we see
boy,
that.
I said, don't go to an insurance salesman. Let's look at something. Let's look at it from a different perspective. So this study is very enlightening. David Blanchett is, we use some of his work in our planning software. Is understandable that user beware when you need holistic advice.
Well, that's right. And advisors, shame on you if you're out there giving poor advice and don't understand it just to pick up a couple pennies off the street.
Shame!
Yep.
We'll be right back.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
So you're ready to retire, but are you ready to transition to Medicare? Knowing how health insurance works after you leave your job is vital. Our next Lunch and Learn will tackle transitioning to Medicare, Wednesday, May 15th, with Danny Ratliff and Richard Rosso. How do you sign up for Medicare? And how will it work with the insurance you already have? Food for thought and food for your belly. Register now for our Transitioning to Medicare Lunch and Learn with Ratliff and Rosso at realinvestmentadvice.com. Realinvestmentadvice.com.
Small businesses are now being challenged by the lack of employees and how to attract and recruit the best employees. To get the better employee, you'll have to offer a better package. Hi, I'm Tom Allen, RIA Advisors Retirement Plan Consultant. Don't assume a 401k plan is too costly or complicated for your small business to offer. Let us show you how to make the most of an affordable and effective plan that will deliver true value for your business and your employees. Call me toll-free at 855-RIA-PLAN or online at realinvestmentadvice.com. That's realinvestmentadvice.com.
The Real Investment Show.
When it comes to wealth management, most people think of stocks and bonds, but it's like enjoying one layer in a 7-layer cake. At RIA Advisors, we want to make sure you get your cake and eat it too. Social Security, Medicare, creating a tax-friendly retirement paycheck. Perhaps you're saving for college. How about life insurance, guaranteed income solutions, all along with comprehensive planning. At RIA, a holistic approach to your money is our priority. Call us today, 855-RIA-PLAN, or find us online at realinvestmentadvice.com. Realinvestmentadvice.com.
And now, another page from the Real Investment Advisors Investing Manifesto. A passive investment portfolio requires active risk management. It's not a choice, it's necessity. Diversification doesn't protect against risk of loss. Let us actively help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
You're listening to The Real Investment Show.
Having a Gen Zer, I'm sort of in their heads, and it's scary. Although my Gen Zer, I know we're all biased to our own children. I said, she's at Emory, and I said, so I just sent her a terse text. You're not participating in any of these Protests, are you? No answer. Next day, finally. No, what? WTH? And I said, good answer.
She just got home from her protest. She's like, no, Dad, no way. Never.
Mm-hmm. That's where the beneficiaries get changed. I told my ex-wife that, who I'm really close with. I said, as soon as I hear something I don't like, poof, she's off.
Oh, man.
She goes, I don't blame you. Because we were on the string with my ex-wife, and she didn't answer it either. I'm like, well, this is a powder keg. I've opened up something here. Let's see what kind of answer I get. I wait. Next day. Yeah. Then she started asking me, what's the best credit card for this? I think it's this based on my homework. I'm like, yes, good one. Yes. She's got her Ally. She's got her online savings account. But here's the thing, what I've learned. Gen Z would rather have insurance than stocks. So what research found that 2/3, 64% of the Gen Zs that they polled and millennials are interested in contributing to an in-plan annuity. So total U.S. annuity sales were $113.5 billion in the first quarter of 2024. That's 24%. That's 21% of our prior year results. But the demand for annuities is a surge in worker interest to invest in annuities within their plans. So I think people are starting to understand that maybe there's more financial security. So when they went through this study, they found out that 51% felt, hey, more financial security in retirement because of lifetime guaranteed income would be helpful, right? It could make retirement plans, savings work like a pension. And to do that through the employer might be beneficial. Now, I'll tell you, the Secure Act has really pushed some of this too. So you're seeing more of younger generations, Danny, that are looking at, hey, pension access is declining. I might invest some money in stocks, but I really would like to have a check for life. So you're seeing pre-retirees' interest since 2018 go up from 33% to 52%. That's pretty sizable.
Yeah, that's a big change. And, you know, this is another one of those deals where I think that we have to be cautious because like you were mentioning earlier before the break, these need to be planned for as well. Now, the younger you are, and this is always the interesting part about this, is that most people don't look towards something like this until they're older.
Yeah, but my kid's making her own clothes. I mean, like I looked at it the other day and said, is she homeless? Like, what the hell is she wearing? She crochets her own clothes. I'm like, what is this, Little House on the Prairie? I'm like, I mean, and our friends do this. I sit in her apartment and she's knitting. And hey, Grandma, you want to go for lunch? I'm like, it's strange. It's a strange generation. I'm just going to say, and they go to thrift stores. They don't go to retail stores. I don't know. Do
you think that maybe living with you had any impact on that?
Could have been.
I mean, just a smidge.
I mean, making her own clothes and stuff.
Dad
not wanting
hasn't
to
bought
spend
a new
any
pair of
money.
jeans in 20 years.
Yeah, not want to spend any money. It could be it. That could be it, yeah.
Oh,
but her friends are all like that too. I mean, I think it's good. I think it's good they're frugal. Although, you know, I'm like, what the heck are you wearing, lady? Well, you don't walk around with a cup. Someone's going to put change in it. So I understand this appeal, and especially millennials who have done a poor job of saving for retirement. But to your point, Danny, it's very important. How much income do you need? How do you get it? Because it's partially variable assets, partially pension or guaranteed income. You don't have to do the whole thing. And if you're sitting with, you might be getting advice. Now, hopefully you're getting fiduciary advice in the 401k, but you may be getting advice depending on who's selling it and how that incentive is to put everything that you own in a guaranteed income sleeve, as opposed to just having it as an option and saying, okay, what's an intelligent formula if I'm not doing any planning? I contribute 10%, whatever I'm doing. How much am I going to gear toward this guaranteed income component versus equities? And if I have a long-term time frame, I want to maybe I skew that, create my own target date fund, right? I'm maybe I have 80% in more variable assets, 20% in the guaranteed income. And then as I get closer, maybe I'm 10 years, 15, I look at that. Now, and again, I don't know how they're going to compare to, say, rolling money over and going into the private markets to do it. So there are a lot of things. I just think the study is interesting about how younger generations are feeling that maybe having a check, if I'm going to live a long time, is a nice benefit. And David Blanchett's done these studies that show that people will spend more when they get guaranteed income compared to variable assets. If they have a check coming in, they tend to spend it all. Yeah. If they know they're going to get another check the next month. So people on guaranteed income actually tend to be, they actually tend to have like more enjoyable retirements because
a better peace of mind, right?
There's a peace of mind, right? Yeah. I don't have to worry about the ups and downs of the market. And if I'm getting $5,000 a month from guaranteed income, well, I probably will spend it all. As opposed to, well, what's my withdrawal rate this year? Stocks are down. So there's something to be said to combining this.
I think that's the key. You've got to combine it. And if you're going to get $5,000 a month, it's going to require you to put a lot of capital aside. So you've already done one thing very well.
If you start young, yeah.
Which is you've saved money along the way.
Right.
And that's the hardest part.
Yes.
So, I could be a big advocate for both, utilizing the guaranteed income aspect. But I think we'd want to back into that number. And for young people especially, it's really difficult. Even for people near retirement. I mean, I know people right now who they want to retire this year and how much do you spend? Oh, I don't know. I mean, and it's not uncommon. I mean, I know you see that often.
No, it's not uncommon at all.
Because I make X amount, I get a really nice bonus, and everything's kind of on autopilot. I've saved this, and tell me, what do you think I should spend? I'm like, well, I don't know. Let's back into these numbers. But when we do that, then we can say, okay, if you're looking for guaranteed income here's how you would do so. But you can do this at a much younger age. We just would not want anyone to put everything in. I've listened to some of these shows. I mean, listen, we're not the only financial radio show out there, right?
I listen to some of these
hate
people.
To tell you guys.
I'm telling you, it contributes to my hair loss, man.
Well,
oh my gosh, what are you at? What kind
you
of
hear some,
advice
I
is
could
this?
tell somebody to put every dollar they have into this product. It's like, wait a second, what?
Yeah.
No, hang on. And so we've got to back into these numbers. It needs to be planned. And granted, we may not know what the future holds and how much we need, but if you had just a little bit, if I were going to entertain this, I would think about, okay, what is Social Security? And there's many of you out there who I know are going to say, well, Social Security is not going to be here. Okay, great. Let's play that game. Say it's not here. So now you need to put more in something guaranteed.
You mean if you're younger and you want to say it's just gravy?
Yep.
Okay, sure. Let's run those numbers. If it gets you to save more, I probably would tell you, yeah, no, you're right. You're done.
Yeah. So put those funds aside and let's go ahead and, back into that. So what is it that you need for your necessities? What's basic needs? What does that look like?
Right.
And for some people, it may be a lot more than others. I mean, some people say, hey, we're going to have 2 homes. We'll retire. We're going to have a vacation home by the grandkids. We're going to have this. We're going to travel. And other people may say, yeah, it's, we don't spend a whole lot. And we're happy. We're great. So getting a better understanding of yourself, what your lifestyle looks like, and what your expectations are will really help you. So if you're married, this has to be a conversation you have with your spouse. And I don't care if you're 25, 35, 45, 55, 65. Doesn't matter. This is something you need to talk about. Because how are you going to know this if you don't have that conversation with your spouse?
I spoke to a 28-year-old
that
all she will do are annuities.
Really?
She says, I want it to cover my fixed expenses. All I want to do is and she doesn't even want an annuity where she can get her money out. She wants it all in, say, I'm going to give it to the insurance company, and they're going to give me a 7% withdrawal rate over time. I don't even want it. Look, I'm creating my own pension that way. This is what I'm projected to get. I live very frugally. If I need stuff, I'll work a part-time job because I'm always going to work. But I want to work doing different things. I want to work at a different company. I want to work part-time. And all I know is I want that check coming in. I couldn't argue with her. She knows what she wants, and she lives fairly reasonably. She doesn't want for much. So she's like, I don't expect Social Security to be here. This is how I'm doing it.
Yeah.
I'm like, okay.
Well, and I think that's...
She's done a lot of homework, so that's
gonna
why
be
it's hard.
different.
I know, but I'm saying that's not the norm. But there are more younger people. What I've noticed talking to them is that they look at guaranteed income as somewhat of a snuggie. They like the fact of at least having part of their money that's coming in, and they understand the longevity risk very well. And they feel that they'll live reasonably enough. See, to them, here's the interesting part. Stocks don't give them freedom. The guaranteed check gives them freedom. And that's a mindset that you can't really mess with. No. It's like an ironclad wall around it because that's how they think. Peace of mind. And I know exactly what I'm going to get. And I like it. Just a trend to keep watching. To Danny's point, annuities should be planned, not sold. Many people we work with do not need them. You need a fiduciary to help you sort it out. We'll be right back.
On Monday.
Oh, we're not going to be back. Shoot. Can't we just take over Chris Salcedo's show? We're back on Monday with Mr. Roberts. Have a good